I get this question all the time. How do I set up an investment account for my kids? So I'm going to cover that today. Now, this is for if you are in Australia. I will do a separate recording video session on the UK and the US because it is obviously different. The principles are the same, but obviously the tax implications and who you use, blah, 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 is different. So, quick one before this. When I'm going through all of the details in here, I am assuming you know what you're going to buy because the actual broker and how to set things up are kind of irrelevant, if I'm being honest, because what you are buying is really, really important. Now, if you don't know, then I have a full program called Invested. I also have a lot more information about tax, specifically if you're in the Australia, US, or the UK. So I will put the show notes, the info in the show notes below so that you can check that out because obviously it covers way more than I can cover just in this video. Okay, so this has been prompted by, I mean, a number of people have asked me for this comment on one of my reels in Instagram, and I'm going to read it because it explains exactly basically what most people ask. So I'd love to set up something for my kids and show them how it works with regular investments ready to transfer to them when they turn 18. I know Vanguard has a kids account, but I'm not sure on tax implications around this and if this is the best way. I'd love to show them the benefit of regular investing so they can watch it grow and it already be a habit for them at 18 and they can continue on, which is, oh my God, chef's kiss, amazing because this is exactly the kind of, well, knowledge and habit I wish I had. Because if you've seen the numbers, I've done a bunch of other content around what you can invest if you just start like as early as 18, if not earlier, and you'll be well and truly a millionaire and not even have to invest that much money because time compounds the money for you. So this is just like brilliant. She's basically already setting her kids up to be financially successful straight off the bat. Okay. Now, also, if you're listening to this on the podcast, then it's going to make a little bit more sense to jump on over to YouTube because I'm going to show you a bunch of stuff online. Okay, so let's dive in. I'm going to share my screen with you. Okay, I have a few things to run through with you. First, in Australia, look, oh my God, I find our tax law around minors so incredibly frustrating. So I'm going to show you a few things. This is from the ATO. Um, but basically, for minors, you are taxed at an incredibly high rate. The tax-free threshold that adults get once you're 18 does not apply. So if you're under 18, there's a few like exemptions, but basically you have to have a disability or there's a couple of other things like most people don't fall onto it like under it. So if you're an like accepted person, means I'm gonna bring that up in a minute. Here we go. Full-time worker, which for most people listening to this or wanting to set up for their kids, their minor is not a full-time worker, person with a disability, or person with a double orphan pension. So most people here, that doesn't apply. So if your kid is under 18, then this will apply to them, meaning they are going to be taxed at mostly 45% of the income. 45%. That's insane. That is our highest tax bracket. Now, it's $0 to $416 is no tax. Then up to from that to 1300 is 66%, like over that. And then after 1300 it's 45%. So you're basically being taxed like basically over 50%, well over when you add up the 66% part if you're making over $400. It's absolute insanity. Now, the reason the government does this is to make sure that the ultra wealthy avoid getting tax loophole benefits by putting their kids in trusts and then paying them like a wage or putting, diverting income to them, which I understand. I set up a trust for my daughter. I recorded an episode on that. I think it was the last one or the one before on that and the reasons for it. And it is an incredible wealth building tool to use. And I mean, honestly, if I could pay my daughter more than $400 a year, then I certainly would, because that'd be an amazing like tax loophole, right? But we don't have it. It's different in the US and the UK. So unfortunately for us, if you're setting up an account, which I'll go through in a minute, like how to do it, what it looks like, what the implications are, and who to go with, basically it will be taxed, like the income that you receive will be taxed at your personal income level. So think of it as if you are setting up an investment for yourself, and you'll be taxed on the income that you receive from that. Now, side note to that, I'm not going to go through the whole thing around tax on capital gains tax, tax on dividend income, and what it looks like, because there's obviously a lot more to go through. And again, I know I'm talking about again, but I have a whole like tax masterclass on that with an accountant that goes through exactly what that looks like, how to set it up properly, like all this really cool stuff inside my program Invested, because there's a lot more to know than just this, like basics. But essentially, if you're showing them how to set up your investment account and how to show them how to invest and do it regularly and really building that skill and habit, then that's a fantastic thing. You can do it with a really small amount. And I'll show you how to do it like in small amounts and what it might look like in terms of the income you receive and build to. Okay, so that's frustrating, right? Taxed at almost 50%. So, what does it actually look like in terms of what we are investing? Now, one side is what I just mentioned. You're building the habit, building the skill. I think this is a fantastic thing, obviously. Like, how incredible to teach your kids this and they get to 18 and then have the skill, have the knowledge, and they can go off and keep doing it themselves. That's amazing. I think that is well worth it anyway. But in terms of the amount that you actually deposit and what that looks like in terms of the income that will be essentially put onto your tax income for the year, it means that yes, it will sit under you essentially. Now, the account will be on your name. I'll talk to different brokers and what it looks like. But the account will be in your name. Essentially, it's like held as a custodian for them. And then it's transferred to the minor that becomes now an adult when they turn 18. It's transferred to them without it having to trigger a CGT event, meaning capital gains tax, which would happen if you just set up an account for yourself and it was in your name, not as a custodian in your child's name, then you'd have to sell it under your name, and then they'd have to then buy it in their name. But the process of you selling it triggers capital gains tax, which then means you have to pay tax on the capital gain. Now, that's one portion of how you receive growth and income through stocks. The other portion is dividends. So this depends on what you're investing in, which is why I said in the beginning, I'm really going to talk to this in terms of you knowing what you're investing in. I'm assuming, and again, this comes if you know what you're investing in, that you're not investing in stocks or any funds that have a focus on dividend income. So therefore, there's not going to be a whole lot of income that you actually receive. So everything I just said about the tax that you're charged on the income, well, hopefully it's really nil to nothing to next to nothing. So the amount is really going to be pretty insignificant. It's not going to matter that much because really the focus is on growth rather than income. And that's a really great thing, in my opinion, because they're so young, they can weather out all the little dips, bumps, crashes, all that sort of stuff. As a minor, because they're probably investing for 20 to 30 to whatever years. Like if you're starting to show them and they're like 10 years old, then they're probably going to use that when they're 20, 30 kind of thing. Or like just build it continuously, use it when they're 40 or 50. So we don't have to worry about the small amounts that you're getting in the beginning in terms of income, because I'm guessing, not to lead you down that path, but my assumption is you'll be investing in something that is focused on growth. Therefore, the dividend income isn't the focus. So the growth means that it's like high growth assets, emerging markets, like high growth stocks, stocks that aren't boomer companies, not income focused companies, not REITs, that sort of stuff. So if you were, let's just say, investing $50 a week every month for, I want to make it like realistic, like super, super, super simple. Let's just make it $50 a week. And you're doing that for 10 years. So say you show them when they're 8 or whatever, 10, and you do it for 10 years at like a rough return of 8 to 9%. That's less than the stock market returns. Remember, by the way, if this is like the first video you've ever watched from mine, then this is all probably going to be a lot. But essentially, that's less than what the stock market returns year on year on average. The average is like 10 to 11%. And that includes crashes and blah, blah, blah. Some years it's 20%, some years it's -5. You get the idea. So if we were to do it for 10 years, then that builds to a total of $41,668. But the majority of that is your deposits, the 26,000, right? The total like growth is 15,000 because we're only investing for 10 years. So it's actually not that long of a time horizon, and we're only investing small amounts, $50 a week. Obviously, if we like reduce that down and it's like $20 a week, then that ends up as $16,000 at the end of the 10 years. You can play around with this yourself. This is just the compound interest calculator that you can get on moneysmart.gov. So this is a government little tool that you can use yourself. Play around with it, have a look. Okay, so I'm going to bring up my calculator right here. And so let's have a look at the total interest, 15,000. So I'm going to divide that by 10 because it's over 10 years. And we're looking at just over $1,500 a year that you're getting in compound growth. It says total interest. I don't look, it's a compound interest calculator rather than like an investment return calculator. So it is being true to the, word they're using, but I'm looking at this in terms of the return that you get. So my assumption is you're investing in high growth assets rather than income focus assets or stocks. So of the 1,500, let's say on average you're getting per year. And by the way, obviously it's not that. You can see here in the little light blue that the amount you're getting in interest return is building and building and building. That's the magic of compounding. It's very difficult for our human brains to understand compounding, even mine. But you're growing that amount more and more. So in the beginning, it's like very little, right? In the beginning here, you can look at like by the 4th year, it doesn't unfortunately even tell you. Oh, it's telling you like it's slowly building. The total interest is 2,000 by the 4th year. So divide that by 4, and it's like you're not even hitting $500 a year, basically. So that's only just over the $400 you're allowed for a minor. You see where I'm going with this. But of the total amount of return that you're getting, the compound interest, most of that is going to be growth in terms of value of the stock increasing in value rather than dividend income. And again, remember, you don't pay for the increase in value of a stock unless you sell it. But remember, you're not actually selling it when you transfer your minor account to them as an adult account when they hit 18. So it doesn't ever trigger a compound. My God, my words are getting so mixed today. I'm in a rush because I'm about to go pick up my daughter from daycare. So I'm trying to like get this out to you really quick. It doesn't trigger a CGT event, capital gains tax event, because you're not selling and buying. So that is the benefit of setting up a minor account. So in the interim, as long as you're investing in not dividend focused stocks, which why would you when they're so young, then that really, really doesn't matter. You kind of see what I'm saying? Even if, let's just say, for the sake of the argument, of the $1,500 on average per year, we all know it's not exactly that every year. Let's just say 10% of that is dividend income, then you're only getting like $156 of dividend income per year, which falls way under the $400 that you're allowed per minor to not be taxed on. I hope that's clear. You can always DM me on Instagram if it's not, and I can record more stuff. So that's kind of roughly what it looks like. And then it transfers to them, and then you're taxed as an adult. Okay, I just realized when I was putting this together and I'm about to upload that I didn't actually show you what it could look like long term. And I don't want to assume that you know what compound interest can do, because I think this is something that most people really don't understand. And I think our brains, our human brains, just can't wrap our heads around how compound interest works. So we'll take the same example, $50 a week for 10 years, the same interest rate. But instead of 10 years, obviously the plan for this is for them to have it for like the rest of their life. They continue it. It builds wealth for them. So let's just say, what does it look like in 30 years? And it's built to almost $500,000. So the birds outside are making quite a sound. And in 40 years, it's built to almost $1 million. So basically, like, let's just say if you start them at like, age 8 or 10, whatever, plus 40, they're 50 now, and they have almost $1 million. But here's what I really want everyone to understand, because this is what most people don't understand about compound interest. If I just add another 10 years on top of that, so yes, they'll be 60, then the total net worth is $2.4 million just by adding an extra 10 years. So it's asymmetrical in terms of what it ends up with if you just keep leaving it a bit of time. If you're watching this on the video rather than listening on podcast, then you can see this, like the area that it just starts to accumulate towards the end, it just starts to become exponential. It's so tiny in the first few years, that first 10 to even 20 years. Obviously we're starting so small. Like at $50 a week, it's really not a lot, but it is so fucking worth it, because you're building it to them becoming a multi-millionaire. Let's just say that you start at 10, 50 years becomes them 60. That's before retirement age. So like imagine saying, like looking at your kid being like, I'm going to make you a multi-millionaire. Not a millionaire, a multi-millionaire by the time you get to 60. And if you just like increase this to $100, and if you're in, obviously you're listening to this because you're in Australia and you send your kids to daycare, you know how much daycare is and how obscene it is. So if you then take, once they move on to school and they're not going to a private primary school, then just take a bit of that money that you were spending on daycare and put it into an investment account for them. Let's just say it's $100 a week. Then that turns into almost $5 million. $5 million just invested $100 a week for 50 years. What? Okay, so drop that down to 40. It's almost $2 million. I kind of just want to show you like what it looks like for them to become a millionaire. And in 30 years, so if they start at 10, then by the time they're 40, then they have almost $1 million, like $750,000. So this is really cool. Like play around with this, even if you increase that to $150 in 30 years. So by the time they're 40, they're over $1 million. Like this is why I love this tool, because you can just kind of really see what the difference a few dollars makes. Because a lot of people come to me and they say, I don't have much to invest. It's not, is it worth it? Or they come with a preconceived notion of it's not worth it because I don't have much to invest. And I just wanted to show you that. And I realized it didn't actually show you the actual possibility of what it means for them to become a millionaire, and what it means for you to do something so small but have such profound impact on the rest of their life. How amazing. So in terms of actual brokers, what does that look like? There's a few brokers that have minor accounts or like kids accounts. I always recommend Vanguard. I think they're a fantastic broker. They have a kids account. The other one I highly recommend is Superhero. I think they're fantastic. Now I'm going to show you two others because they always get this question from Aussie investors, and that is Self Wealth and Stake. For some reason, people really love Stake. I don't. I don't love Stake, and I think there are better options than Self Wealth, and I'll talk to why in a minute. Now, Vanguard, and again, I want to preface this with like the broker that you choose really is the least important decision that you make. Like it really, really is. Unless you're choosing Robinhood, in which case, please steer away from them. Robinhood gamifies trading. They really they try to get you like buy and sell a lot. It honestly, they use a lot of like psychology, behavioral psychology against you, because the more that you trade, the more that they make money because you're transacting more. There's a whole other reason, lots of other reasons why, but I don't love Robinhood. Vanguard obviously has their restrictions on listing only Vanguard ETFs and managed funds, but you can buy individual stocks. Most of their transaction fees and costs are free. That's partly why I love them. The other reason is they've been the longest standing in terms of fund provider. They're always for the investor. The reason why they're like leading in terms of $0 brokerage, you can see it like right on their screen right here. $0 brokerage when you buy ETFs is like they've always been low cost, low cost, low cost. Okay. Now you can set up a kid account with them, and you can read all about it. So like read, you do your own research. It's very important, but read about the investing for kids on their website, and then have a look at Superhero as well. So they will explain everything on here. With everyone, as I said, you have to set up your own account yourself first. Then you can set up a minor account once you're set up in there. So you will be the manager essentially, but it'll be a custodial sort of setup in their name, ready to be transferred when they turn 18. And I think that is a big benefit because they can like see that it's their name and it feels like a bit more ownership on their part, Okay, so you can invest from very little, so $25 per fortnight, which is so great, or month or quarter. So you can start like so small, and it really isn't about the amount initially. It's sort of just like introducing them to the concept, showing them what it's like, getting them to understand what a company is and that you're buying shares and that you own part of it, and that that is wealth building and that stocks pay you money. Like, I mean, how cool is that? Could you imagine if we were taught this? Oh my God. Um, Costs are really, really low. I do have a personal invest account with Vanguard, purely set up, ready to go for my daughter. So I have their platform, and it is very, very simple. As a trader, so I invest and I trade. I teach investing only. I don't teach trading because most people they're really not built to be traders. But I look, as a trader, their online sort of platform, broker platform, it is very, very, very simple, which is perfect for kids. I think it's a little bit too basic for adults, but for kids, I think it's fine. And anyone can choose to switch brokers at any point. You can do an off-market transfer, which is basically, it's kind of just like a bank transfer. It's literally just transferring assets from one broker to another, and it doesn't trigger capital gains tax or anything like that. So you can change your mind later. Like you can set this up for them and they can change their mind when they're 20. Like it really doesn't matter in the initial beginnings. But it's a very basic sort of like look and feel when you go inside. I think that the way they do it is really, really simplified. And for kids, I think that's perfect. Superhero. Now, I will show you their pricing. This is why I think they're one of the best and leaders. It's because they charge $2 per trade, and they have a lot of other benefits as well. So you can see here, I actually like that they've they've actually done the work for me. I was going to talk to you about stake and self-wealth. I don't ever recommend CommSec. I think that any bank investing platform is they charge like so much. Like some of them charge like $20 per trade. It's absolute insanity. So if you're buying something, like if you're putting in $25 per week or even per month, and they're charging you like $10 even, then that's half of your money gone just to press buy. As I said, Vanguard are $0 brokerage, which is why like it makes a big difference, particularly when you're investing really small amounts. So Superhero are $2, and then or 0.01% over $20,000. But the other stuff is, which is really, really great, is auto investing. Now, I think that this is probably less important or less of a focus with kids, or maybe it is for you. Like you could set up a quarterly date with your kid, you do it together, you go online, you log into your account, you have a look at how much it's grown, you track the progress, you could have a little chart that you stick on the wall. Like that's really cool to do it manually. Or you could just do it in, auto investing, and it's all done for them and you show them once. But I don't know, they're not really like invested, for lack of a better word, in the progress of it, and they're not seeing it regularly. So for kids, I don't think that auto investing is necessarily the best thing, but for adults, definitely, because we have busy freaking lives, right? So we need to move on and just like have it done for us. I encourage auto investing because most adults do forget about stuff, particularly when you have a job, you're busy, or you're studying and you have a job, or you have kids, and like as if you're going to have to try and remember to add another thing to your mental load to do every single month. They have lots of other things which I think are not important in this case, like live data of the market. That's not important, all that sort of stuff. But compared to stake, they charge $3, but stake charge 0.5% of every dollar that you put in. So if you put in $10,000, they'll take 0.5% of that just because you put money in. It's absolutely absurd. Like I don't even genuinely, like, who would sign up for that? You putting in money and you're like, they take it. It's crazy. Anyway, self-wealth charge $9.50 for brokerage every time you buy, which again, they used to be sort of like a little bit cheaper compared to a few of the other ones that came in initially, but Superhero have really taken the lead, in my opinion. So investing for kids with Superhero, they have a little bit of info which explains exactly how it works and what happens. So if you have more than one child, you can set up multiple accounts under like listed under your account. So the first step is setting up your own account. You're legally responsible, which it talks about. Then when they're 18, they create their own Superhero account, and then you can do an off-market transfer. Like I said, it's just like a bank transfer into their now adult account. And then it talks about setting up a minor account. So it step by step shows you all of the info. Pretty cool. Hey, now I was going to show you self-wealth, but Superhero did it for me and how much they charge. And I was going to show you stake, but we've kind of covered that basically. There it is. So that's basically it. I know that I covered like so much. My God. I feel like I just haven't stopped talking nonstop for the last 15 minutes. But essentially, like in terms of doing this for your kid, it's an amazing opportunity, even if it's a really, really small amount. Like this is something that you could do like with like $20. This is something that you could do every time, they get money for their birthday or whatever. They do big jobs around the house that are outside of their normal just helping. Every time they do just like anything that you want to add to every time, you can go on together, add it, talk about like what you're building for, talk about their dreams, talk about their goals, talk about like what their future might look like in terms of what they want out of life, and show them also what investments mean in terms of how much you can get paid without working because you own these companies. And how cool that you can be like, hey, that iPad, that like phone that you have, you own a portion of that company, obviously depending on what you invest in. Okay. Or as always, DM me on Instagram. Let me know if this was helpful. Ask me any more questions so I can help you out. And again, I'll put the link to Invested below in the show notes to go and check that out as well. Okay, see you next time.